First, Kevin Kerr of Kerr Trading International joining us over at the CME Group. And Kevin, we got to talk about commodities and really broadly what the commodity space is telling us about the economy.
Well, I think it says we're starting to see glimmers of recovery, but it's still cautious. You know, we're seeing oil kind of bounce around here, but slowly creeping higher on the belief that we are seeing recovery, that China is nibbling here and buying more supply, and that weaker dollar. Now, we've seen the dollar find a little foothold, and then we see commodities pull back. So there's no doubt a lot of this is dollar driven.
We'll talk more about the cycle of commodities with Kevin Kerr up. A dollar-driven market. Certainly there is one in the commodity space, but also taking a look at the global economy. Kevin Kerr of Kerr Trading International does just that. He's still with us over at the CME Group. Kevin, you mentioned ahead of that break, you think that the commodity rally in oil and some other commodities, copper certainly included in there, all dollar-driven, not an expectation of a recovering economy?
Well, it's a heavy split to the dollar. You know, look, I'd say it's probably 90 to 10% demand. You know, everybody's focused on the dollar, and as we see the dollar weakening, we're seeing a lot of the commodities rally, and vice versa. We see the dollar falling, we're seeing commodities, you know, I'm sorry, when the dollar rallies, you see commodities fall.
Right.
This is pretty much what's been driving the market lately, not strictly demand, but we are seeing glimmers of demand, not only out of China, but we also have seen a couple of fairly bullish inventory reports for oil, not this week, but recently. Right. So we are starting to see that recovery, but it's very, very slow, and I would not say it's the big driver here.
You know, when you take a look at the U.S. economy, a lot of folks saying there's not much growth here. You got to remember, it really is a global community going after these commodidies. Meantime, oil prices, as you mentioned, they've been jumping around here, still close to 10-month highs. Natural gas, though, 5-year lows. Why the split? What's going on?
Well, you know, we just haven't seen that demand. That demand in factories, that electricity demand, and supplies are just abundant. We haven't had a wild hurricane season. We aren't into winter yet, and a lot of that pressure is coming from the market as well. Just no interest there and a lot of pressure on the downside. However, I don't see a ton of downside from here. I mean,
not much left, right?
There's not
around
$3, and that usually is a good sign. It doesn't mean it's going to go up necessarily, but you know, China's a big player here globally. We could start to see pickup for wintertime demand. I would say you're not going to see a major rally, but you could see just a seasonal demand spike from these levels.
I know you're usually a more short-term focus, but between now and the end of the year, would you rather have oil or natural gas long?
I think I'd probably rather have natural gas, funny enough. I wouldn't expect a big rally or anything, but I would expect it to move up from here.
All right. Meantime here, that does kind of beg the question of how you play these commodity markets. If you go after individual commodities, or you play a basket of them. Take a look at the DBA, the ticker symbol for the exchange traded fund, made up 25% split between corn, beans, wheat, and sugar. And when you take a look at the performance, it's sugar that's obviously been providing the upside here, but overall the basket is up only 2% this year.
Right. It's an interesting index. I mean, we have these three mixed together, and certainly sugar's been on just a tear, rallying, so it's skewed this ETF. I think this is the problem with the ETFs. I personally prefer to buy the individual commodities. The options, it may not be appropriate for everybody.
Right.
ETFs might be easier to handle, but this kind of skew just doesn't make sense to me. I'd rather be trading just sugar or the corn, or just have a smoother thing for my portfolio. It just doesn't make much sense to me to have it.
Commodity to watch here is the dollar, not really necessarily any commodity though, right?
I think it is going to be for a while, until we start to see real pickup in demand, and that may be another 3 to 4 months before we actually start to see the engine start to fire again on all pistons.
All right, there he is. Kevin Kerr from Kerr Trading International with us over at the CME Group.
Thanks, Tom.
The red ink on Uncle Sam's